Hello friends, we at Bhama Consulting are financial and indirect tax consultants working across the globe and helping our clients by providing customized solutions as per their requirements. We have a perfect blend of professionals who are experts in their respective fields and work together to provide the top-notch service to our clients within the agreed timelines. We now start with the topic of our discussion today, that is goods and service tax. What do we mean by goods and service tax, popularly known as GST? We try to understand goods and service tax in terms of existing indirect tax structure. The existing indirect tax structure is bifurcated as follows: goods, services. In case of goods, it can be based either on production or on sales. Based on production, we charge excise duty which is leviable at the time of production. Based on sales, tax is leviable at the time of sale. In case of services, we currently pay service tax under two mechanisms: regular charge and reverse charge. If we take any service which is covered either under regular charge or under reverse charge, tax is levied at the earlier of 1. Date of invoice or 2. Date of payment. The tax compliances under the existing law in case of goods mainly comprises of A. Excise duty and B. Value added tax. In case of services, we comply with service tax. The proposed system is planned as follows. The focus has shifted from origin-based taxation to destination consumption-based taxation. For example, if a sale has been executed from Gujarat to Goa at present, since the goods are sold in the state of Gujarat, VAT would be payable in the state of Gujarat. As proposed, since the goods would be consumed in Goa, taxes would be paid in Goa. The proposed GST is a destination consumption based tax implemented in dual model. One, CGST and SGST or IGST. Whether to charge CGST and SGST or IGST would depend on the type of transaction. Let us now have a look at the transitional provisions. The transitional provisions regarding migration of existing taxpayers are as follows. Taxpayers who are registered under any of the indirect taxes shall be issued a certificate of registration on provisional basis. Such certificate shall be valid for 6 months from the date of its issue. The period of 6 months may be extended by the government. Final certificate will be issued once additional documents are furnished. The documents required would depend on the constitution of the SSC. Please note, migration of the existing taxpayers is compulsory. The certificate of registration issued on a provisional basis would be cancelled if the person does not submit additional documents within 6 months or the person is not required to be registered under the GST. We now see what happens of SENVAT credit in the transition. This is applicable to taxpayers who are registered under the present taxes. This can be divided into two logical parts. A. Credits which are carried forward in returns. Existing taxpayers who have filed return under the earlier law are covered. Persons not covered are composition dealers, which means person whose turnover is less than 50 lakhs in the preceding financial year and such person has opted to pay tax either at a fixed amount or at a fixed rate. Categories covered here are inputs, input services and capital goods. The provisions regarding carried forward are under the CGST law. Amount of SENVAT credit carried forward in the return relating to the period ending with the day immediately preceding the appointed day, furnished by him under the earlier law. It means return has to be filed as per the provisions of the earlier law. Under the SGST law, amount of value added taxes and entry tax carried forward in the return relating to the period ending with the day immediately preceding the appointed day furnished by him under the earlier law not later than 90 days after this said day. It means return has to be filled as per the provisions of earlier law. The time limit here is not later than 90 days after the appointed. And B. Credits which are not carried forward in returns, popularly known as unavailed credits. This is applicable on capital goods. Formula to calculate unavailed credit is total tax paid minus credit availed earlier. This logical bifurcation is because of the existing provisions of SINVAT credit. The current provisions are 50% of the tax paid is allowed in the year when goods are received, 50% of the tax paid in any subsequent year. The lawmakers have inserted two different sections, Section 168 and Section 169, in order to tackle the existing situation. We now see credit of eligible duties in case of inputs in stock. Persons covered here are a registered taxable person who was not liable to be registered under the earlier law or was engaged in manufacture of exempted goods or provision of exempted services or a first stage dealer or a second stage dealer or a registered importer or a person who was providing works contract services and was availing benefit of notification number 26 2012 service tax dated 20th of June 2012. Eligible duties under the CGST law are excise or additional duty of excise, additional duty of customs, national calamity contingency duty, popularly known as NCCD, service tax. Eligible duties under the SGST law are VAT entry tax. Please note the list here is an illustrative list and not an exhaustive list. The conditions to avail credit herein are such inputs and or goods should be used or intended to be used for making taxable supplies under this act. The said taxable person passes on the benefit of such credit by way of reduced prices to the recipient. The said taxable person is eligible for input tax credit on such inputs under this act. The said taxable person is in possession of invoice and or other prescribed documents evidencing payment of duty under the earlier law in respect of such inputs. Such inputs and or other prescribed documents were issued not earlier than 12 months immediately preceding the appointed day, and the supplier of services is not eligible for any abatement under the Act. What will happen to a person who manufactures both taxable as well as exempt goods, or a service provider who provides both taxable as well as exempt services? Please note this case is covered only under the CGST law. The provisions for such person are as follows. In case of taxable goods or services, the amount of SINVAT credit carried forward in a return furnished under the earlier law, and for exempt goods or services, the amount of SINVAT credit of eligible duties in respect of inputs held in stocks and inputs contained in semi-finished or finished goods held in stock on the appointed date. Please note the eligible duty here were discussed a few minutes ago. It means the provision for such a person indicates that such person should take credit in respect of both taxable as well as exempted goods or services. What happens in case a person switches from composition scheme to normal taxation under GST on the appointed day? The provision for such persons are they should take credit of inputs lying in stock and inputs lying in semi-finished goods or finished goods on the appointed day. For example, let's assume the appointed day is 19th September. Then such person applying the provision should take credit as on 19th September. The common conditions under both CGST law and SGST law for such switchovering persons are such inputs and or goods are used or intended to be used for making taxable supplies under this act. The said person is not paying tax under section 9, that is composition scheme. The said taxable person is eligible for input tax credit on such inputs under this act. The said taxable person is in possession of invoice and or other prescribed documents evidencing payment of duty under the earlier law in respect of such inputs, and such invoices and other prescribed documents were issued not earlier than 12 months immediately preceding the appointed day. Please note, if the taxpayer is covered under the SGST law, along with the above condition, one extra condition has to be fulfilled, which is credit has to be allowed under the earlier act as well. What happens if inputs or input services are in transit on the appointed day? Credit will be available if input services are received and recorded in the books of accounts within 30 days from the appointed day. Please note, tax on such input or input services has to be paid under the earlier law. The time limit of 30 days is extensible by 30 days if sufficient cause is shown. We now talk about return of goods. The goods which are returned can either be exempt goods or duty tax paid goods. If exempt goods are removed up to 6 months prior to the appointed date, are returned to the place of business within 6 months from the appointed day, no tax shall be payable if such goods are identifiable to the satisfaction of the proper officer. If such goods are returned after 6 months, it will be treated as a taxable supply and tax has to be paid by the supplier of goods, that means original buyer of goods. No tax shall be payable if goods are returned by a non-registered person because he is not allowed to issue GST invoices. If duty paid goods are removed up to 6 months prior to the appointed day, are returned to the place of business within 6 months from the appointed day, refund can be claimed if such goods are identifiable to the satisfaction of the proper officer. If such goods are returned after 6 months, refund cannot be claimed by the person who has paid the duty. To summarize, if exempted goods are returned after 6 months, duty will have to be paid. If duty paid goods are returned after 6 months, refund cannot be claimed. What happens if inputs, semi-finished goods are sent to job worker? If inputs or semi-finished goods are sent to job worker prior to the appointed day, are received as per the provisions of earlier law within 6 months from the appointed day, no tax is payable. The period of 6 months is extensible by 2 months if sufficient cause is shown. If such inputs or semi-finished goods are not returned, VAT credit availed under the earlier law has to be reversed. Declaration has to be made by both manufacturer as well as job worker in order to avail this benefit. A relaxation has been given in case of semi-finished goods. In addition to the above, if semi-finished goods are sent to the direction of the supplier, it will still be treated as supplied back to the supplier. If finished goods are removed prior to the appointed day as per the provisions of earlier law, are received within 6 months from the appointed day, no tax is payable. Please note, the finished goods we are talking here are removed without payment of duty. The period of 6 months is extensible by 2 months if sufficient cause is shown. If such goods are not returned, VAT credit has to be reversed. The manufacturer may remove goods on payment of duty or export without payment of duty as per the earlier law from the other premises within 6 months or the extended period as the case may be. A situation where finished goods can be removed without payment of duty. Suppose a car is removed out of a factory without payment of duty for testing. An example of testing can be working of brakes, etc. Are returned to the factory, it shall not be taxable if the car is returned within 6 months from the appointed date. Kindly subscribe to our YouTube channel for further updates and more videos on the upcoming GST law. Thank you.